Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at ticker symbol LZB, Lazy Boy Inc. Um, we're gonna see if the stock deserves to be mid 30s. Does it deserve to be lower or higher? We're gonna see what institutions and hedge funds are doing. We're gonna run my proprietary stock projection calculation to kind of give us a direction of which way the stock's gonna go. We'll look at the balance sheet, we'll look at the assets, and we'll hit the subscribe button together. Click, click, click. Okay. Looking at potential bull and bear price targets. So obviously we've had a lot of resistance at $38.06. So that is going to be price target number uno. And then we also have our all-time high. Actually, I don't know if this is all-time high. Our latest high of 39.87. So those are the areas to watch if earnings are really good. That's about a 10% move right there. To the downside, however, 32.49 is going to be our first target to watch on the downside. Our second target to watch is going to be 28.19. And I chose these targets based off of support in the near term. I haven't looked at the bigger picture yet. So let's do that because that's what I normally do. And basically, if you owned this stock back in 2018, you're about flat. If you own this in 2014, you're only up 20-ish, 25, 26, 27, 29, 30%. But I'm guessing they do offer a dividend based off of this. This is a very boxy looking chart. So we're going to go ahead and box it together. Let's box this. Here's the bottom of our box, and we'll make kind of like this as our top because we can see we only had this one little breakout right here, and that's about it. So we're going to keep this boxy box, and we're also going to add add a trend. Actually, let's add a couple trend lines. Doing a couple trend lines. All right, I could probably extend this box. There we go. Let's do it right there. Perfecto. Okay. So we have our first support, our second support, and our third support. All right. I mean, I dig it. I'm digging this chart. All right. So I like to draw, so thank you for allowing me to do that. The strength, it is kind of with the bulls right now. It's at a 54. However, look at this momentum. It actually looks like it is coming down. Money flow is not bad. We can still see that money flow is good. Relative momentum index is actually flat. It's been flat for about 3 months, but it did have a nice dip, and then it's basically been going up since end of 2022. So we're going to check the institutional and hedge fund values on that just to confirm. However, this momentum right here has me a little concerned, and these candlesticks are a little wishy-washy. No real confirmation of what to expect. I mean, again, we do have our upside of 38.06, and then I think, 39.87, which would put us, right above our resistance. So very interesting, very interested to see how earnings goes. Man, if you were a patient, super patient investor, you wait until the monthly candle touches the 365-day SMA. On a lot of stocks that I've looked at, if that's your main play, you don't have any other plan except to buy when it stock price hits the 365-day SMA on the monthly chart, you are golden, my friend. So just I need to build that into a scanner because that is freaking fabulous. 365 SMA price touch scan. It's fantastic. Okay, and that's a thinkorswim type setup. So we can do that another day. But anyway, looking at the sales, this is fantastic. Shares outstanding going down. That's natural and organic accumulation, baby. Earnings per share, just beautiful stair stepping here. This is just muy fantástico for this company. I mean, look at the PE. They're profitable. They offer a dividend. Okay, let's go through all of it really quick. PE, fantastic. Forward PE, they're even more undervalued. Quick ratio, 1.3, fantastic. Debt, they do have some debt, but they're paying it off from 0.51 to 0.43. Earnings per share this year down 30%. Very, very, very unfortunate and also potential opportunity. Looking at the past 5 years, earnings per share 15%, fantastic. Sales past 5 years, 8.75, fantastic. Um, Gross margin 43.88%. I didn't know furniture. I mean, I guess furniture does have a really high markup, but being that it is a big box retailer, physical stores, I'm, I don't know what their online presence is like, but if they're doing online sales, they probably are good for them. Again, they're profitable, just fantastic. Shares float nice and low, good average volume. What else could you ask for? Let's go ahead and run my calculation. They do 1 billion, or they have 1,500,000,000 in market cap. They have 117,690,000 in income. And they do 2,050,000,000 in sales. That's insane. All right, now we're going to incorporate the cash and the debt on the kotele. All right, they have 341 mil in cash plus 341 mil, 20,000. I just messed that up. 341,020,000. Yes. Total debt. They have 400. That's more than I thought. Minus 418,150,000. Okay. And really quickly, they have 1.9 billion in assets and 930 million in liabilities. Assets dwarf liabilities. Dos to un, which is fantastic. This is great. I see Michael Adam Leggett. He sold 3,077 shares, but he also got options. Janet Kerr sold 4,500. Janet, why did you do that? She sold over half of her stake. I mean, at least she sold while they were up. Okay, no red flags here. That's what I'm basically getting at. Okay, and the stock price again is 35. So I mean, she sold that in 2023, so can't really blame her. All right, this we're gonna divide this by 42,300,000. And just a forewarning, this calculation is only really, really good with companies that don't have dividends. This company does have a dividend, so we'll maybe do a little modification. This is the $84 stock price. Analysts have $43 stock price. 45, 36, 40, 36. Actually, these are really old. These are from 2020, so ignored. My $84 target means LZB. If that is even remotely true, because with dividends they're giving away some of their free cash, so I could remove 2% from the stock, but I don't know. I really need to come up with some type of modification for dividends, but I really don't find that. I'm not really excited about that. Maybe one day when I'm really, really, really bored. Maybe. Okay, so old data shows institutions own 99%. I'm going to say they own over 115% because my calculation is showing at least double. So again, old data is 99% ownership. New data is, drum roll, blah, 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 117. I said 115. I was close. So that is about an 18% increase institutions added to their positions. Let's take a peek really quick. I mean, it's up there. Vanguard added 7,000 shares. Dimensional Fund added 300 some thousand shares, and BlackRock decreased about 200 plus 200-ish shares. Um, and then again, we go down here, we can see a lot of reducing positions, adding to the positions, et cetera, et cetera, et cetera. So, yep. I, as a chartiste person, um, I would like to see it come back down to 33, 37. That gets us to our $32. That gets us near our 32.49 bear target number one. So that's where we're at with the stock. Um, if you've made it this far, consider subscribing. My projection does show that this company is undervalued. So yeah, I mean, I think this one is a decent just buy and hold in your portfolio if you have that kind of patience, and if your risk tolerance is, if you're a scaredy cat, basically, because it was trading at $31 back in 2014. Fast forward 10 years later, it's only up $4. But I mean, it's gone down to 15 and then as high as 46. So again, overall, over a 10-year period, smooth, but there are the ups and downs. So anyway, I'm going off. Thank you so much for watching. Good luck if you're in this one. Take care. Goodbye.